Thanks for turning up. I'm appreciative of your time because there's this sporting event tonight that a lot of people like to watch. I'm a rugby union guy, so I don't really care. All right, where's my little clicker? Here it is. Right, so I'm TraderCobb. Craig Cobb is my name, and what I do is I educate traders. I've also got a podcast where I talk to lots of different people in the space, and I'm fortunate enough to learn about the space through the voices of the experts in the space. I'm not a blockchain expert, so I'm not a tech guy either, but I'm a dude who trades. I've been trading traditional markets for 12 years. And the best thing about cryptocurrency is the reward to risk ratios are so much bigger. You know, if I'm trading foreign exchange, for example, if I got my risk multiple of this, my reward multiple might be that. On a good day, 3 to 1, that's a good trade on FX, depending on your time frame, obviously. But with cryptocurrency, your risk multiple still remains at this, but your reward multiple, oh shit. It's straight, like it's huge. So you take the same principles that I do with my risk management strategies trading traditional markets and you employ that into a cryptocurrency market. And you know what? The combination of the two is truly phenomenal if you know what you're doing. Thankfully, I do. I've done 12 years of making mistakes, so it qualifies me to help people. And that's exactly what I do through TraderCobb.com. We teach people how to trade 3 different types of strategies. I commentate markets, and of course, you've got the podcast. Now, every single one of you has got a TraderCobb card on your chair. You are welcome. You are welcome. Tough crowd. The enthusiasm is just amazing. The enthusiasm of this guy just too soon, right? But look, the fact of the matter is you can see my socials, you can get on my channels, you can do what you want to do, but you can get more information. I want to take you through tonight, pretty straightforward, and prove something to you. Yes, I said prove something to you. Something that is true, real, factual that you can take away tonight. It's not just a theory. I don't teach you about everything you need to know about trading. I teach you the strategies that I employ that I've done for years and years and years to make a living. Now, who trades crypto? Oh, shit, that's pretty good. Yeah, who trades crypto profitably? Yeah, it's okay, don't worry, you don't have to do that, it's fine, I'm not going to put you on the spot, I just did, but Look, the bottom line is this, right? I got a saying that even a turkey can fly in a hurricane. There are a lot of experts out there right now that started buying Bitcoin and crypto at the start of 2007. All those many, many, many months ago. And because they bought then, they've all done well, and they're all experts. You've got to have a structured approach to trading. Now, I'm going to show you something tonight that you cannot, you can try and argue, but you'll be wrong. I'll show you something that you can use immediately. It's a zone, it's an area, and I build my trading strategies around this area, and it's going to knock your socks off. But what I want to talk about first of all is this. I speak to some amazing people in the space through the TraderCobb Crypto podcast. We're the #1 podcast in the world. That may shift. Podcast rankings are funny, but we've been up there for quite some time now. I went to Consensus in New York. You probably all know about the event. And even before that, I've been getting some of the most amazing crypto guests from like Stephen Chewell, who's one of the, I think he's the CCO of Ethereum, through to Chase, such and such, I can't remember his surname, who's one of the, Trace Mayer, so I had Trace Mayer on the show. Thanks, mate. Appreciate that. Well done. Who's like one of the, he was predicting Bitcoin and saying to people to buy Bitcoin at 25 cents back in 2012. He's got a lot of friends. He's the dude who puts down bets of $100 million against people to try and prove him wrong. You only put down bets of $100 million if you A, know you're right, full stop, and B, have that sort of money to throw down. So I've been speaking to a lot of amazing people. One of these people is this bloke on the screen right now, Yuan. He's a fund manager. He's a big tech investor, somebody who's very, very big in the space. I also got to speak with John from Shapeshift. Many of you have used Shapeshift for your transfers, for buying things and whatnot. I got to speak with this lovely lady from the World Economic Forum as well. Sheila, is that her name? Yeah, Sheila. Got that wrong, right. But my point that I'm trying to make here, look, check this dude out, right? York Rhodes, global business strategist and blockchain for Microsoft. I've been able to speak with, interview, and get into the minds of a lot of really good people in this space. Now, I told you at the beginning, I'm not a tech guy. You asked me how the blockchain works. I get it, but I'm not going to tell you how to code. I don't even know what the languages are. But I'm an investor, I'm a trader, and I'm somebody who can talk with these people. The thing I find really interesting, especially now, because the market's taken a hit, you all feel it, you all know it. We've come off, right? I interviewed, 20 to 30 people when I was in New York, and guess what conversation didn't come up? The price. Do you know why it didn't come up? because these people are intelligent in the space. They're not after a quick win. They can see what's going on. They know what's coming, and they're involved in it in a very, very big way. They can see the future and they know what it is. The conversations that I have always end with this me asking them the same question. The internet and blockchain are compared quite frequently, right? So are we in 1993 or 2000? Yeah, right? Some people are even saying 1990. Now, this is not me saying this. These are people that know a hell of a lot more than what I do. But I find it interesting asking that same question. You can listen to all the podcasts on the channel. They're all there. And you can hear what their answers are and the reason why they're saying where we are in this space. So for you guys to be here tonight, you haven't missed the boat. You're so early. Don't even care if you're in 2012. If you just got in today, good buying time, right? We are in the beginning of something really, really big. Think of this, right? Think of it like this. If you've got somebody who's got a bike shop, they sell bikes. You go, what's the website? They go, I haven't got a website. You go, what? Right? Everyone who has a business has a website. Believe the blockchain is going to have the same sort of similar effect, and we'll see that in the next 5 to 10, 15 years and onwards we go. So we are at the absolute birthplace of an amazing market. These people are not interested in price. They do not care. So I'm going to take you through and run you through a bit of a run through of the markets in just a second, but I want to teach you a couple of things. Technical analysis is not a trading strategy. Technical analysis alone is not a trading strategy, just like sugar is not a chocolate cake. Technical analysis are ingredients. You've got to bring those ingredients together to create something. Now, I hold recipes that I use and employ and teach and put into the market and have done for a long time. Learning about technical analysis, oh, it's an ascending triangle. Yes! You know why people like patterns? Because when you were 3 years old, you had a timber box. And in that timber box, you had a star shape. A triangle shape, a square shape, a circle shape. And you know what your job was to do? Your job was to make your mum and dad really proud by taking the triangle and fitting it into the triangle hole. Yes, I got it. It gave you that gratification. It made you feel good. Now, technical analysis goes back in and rings on the same little bell that does. We want to believe that that's as simple as that to make money in the markets consistently, but it's not. There are a lot of courses, a lot of people, a lot of books, a lot of crap teaching technical analysis. Now, I teach technical analysis, but I teach what you need to know for the strategies that I know work. Trading is about risk management and working probabilities. And then there's keeping it cool. That's the big one that I can't teach you how to keep it cool. You're going to have meltdowns, but that's okay. So I teach trading strategy. There's a big difference between that. Now, things that are very simple, that are very, very simple, support and resistance, right? Resistance is two tests of a specific upper price point, like the ceiling. I won't touch it again. The ceiling is my resistance right now. It's a flat horizontal level. Is it horizontal, yes or no? Pardon? Shit. Yeah, it's horizontal, right? It's not sloping, it's not deep. It is horizontal. It's my resistance. What's the floor? It's horizontal. Very easy to picture these two things. Horizontal support and resistance are key. They are true. They're real. They're 180. There's no tinkering with that. And the beauty of it is that traders are looking for these levels because old support can become new resistance and old resistance can become new support, as witnessed on this chart. Guess what? It's really simple too, right? I want the advanced stuff, Craig. Give me the advanced stuff, Craig. Give me the advanced stuff, Craig. The advanced stuff is a really good understanding of the basics. Yeah? Think of, I'm a rugby guy. We're going to watch some football tonight if we're going to watch some football. It's the execution. It's flawless execution. The All Blacks, as much as I hate to say it, are the best rugby union side in the world by a bloody long way. And they do the tricky stuff. But they earn the right to do the tricky stuff by playing it properly and doing the basics correctly. Try and jump to the tricky stuff without doing the basics correctly. You're going to fall over flat in your face. The basics, ladies and gentlemen, are where you make your money. Very simple stuff too. It's not hard to understand. Those of you who use sloping trend lines, you're wasting your time. You are. Why? Everything that I use, everything that I trade is objective. Literal written checklists. So my courses, my strategies, they are literal checklists. Essential factors and bonus factors. Pretty easy to understand. The word essential, maybe we need that. Yeah? You have to have met the essentials before you can go anywhere. Sloping trend lines do not come into my trading at all because, I'll tell you why. I used to trade sloping trend lines. And one of my trades was if it bounced off the sloping trend line, giving a little bullish candle in an uptrend, I'd trade the break of the bullish candle. What if it got really close? Got really close. Like, I mean, I'm talking, I just tweak it. I'd move the line. There we go. Now I can take the trade. Now, if you've ever tried dancing with a partner, maybe it was your year 11 debutante ball. Maybe you do Spanish dancing now. I don't know. But you try and drag somebody around because that's what you want to do. You look like a dickhead. You've got to learn to move with your partner. Your partner is the market. You learn to work with the market. You'll get rewarded by that. If you try and drag the market around, you will lose all the time. You'll get lucky sometimes, but lucky's not a strategy. Does that make sense? Yeah? Am I speaking sense so far? Okay, cool. Let's keep going. Reward to risk ratios. I kind of covered that before about the fact that the same reward risk applies whether you're trading foreign exchange or you're trading cryptocurrency. You've got to focus as a trader on keeping your money because without money you have got nothing to work with. Effective scanning time. We're all very, very busy. You've got to know what you are actually looking for. That's why I have a design approach. I don't go to the market going, oh, I want to find a trade. I go to the market and I go, I'm eliminating everything I possibly can. If I find something where I go, there is no reason that I can find to not take this trade, then I take the trade. It's a different mindset though, isn't it? People get excited. They go work, or they work at 9 to 5, they get home, 6 o'clock, put the kids down, 7 o'clock. They had dinner, 8 o'clock. They got 2 hours to trade till 10 o'clock. When they go to bed, and they read and they go to sleep. In that 2 hours, they want to find a trade. And you will find whatever you want to find. We're very good at justifying shit in our own mind, right? We're very good at justifying things. I've never taken a trade I thought would lose. I've taken some really bad trades. I convinced myself to rationalize why I'm doing it. So your mindset's important too, but you've got to focus on managing your risk, not your reward. The cradle zone, this is what I want to show that I think you can take away from tonight, right? It's free, it's for you. The cradle zone, there's a buy zone and there is a sell zone. It's between the 10 and 20 period moving average. On your left is the buy zone. On your right is the sell zone. And it's the distance between the period of 10 and 20 moving average. The 10 in this little red, no, okay. The white line is the 10 period moving average. The purple line is the 20 period moving average. Now, this is what all my trading strategies are built around, and it's because it's an equilibrium. Markets trend. They move up, they pull back, they move up, they pull back, and then they consolidate. And then they trend. Uptrend, downtrend does not matter. Most people can make money when the market goes up. Not many know what to do when it goes down. Not many know how to hedge. If you are managing a portfolio of your own and you don't know how to hedge, you're missing out on 50% of the market movement. Markets go up and markets go down. If you can only make money when markets go up, you're missing 50% of the opportunity. Do you realize that? Traders are there to help, trading is there to help you to maximize your returns. Now, what I'd like to do is cut to, yeah, please. I want to do it live. So I'm not somebody who just works some slides. I want to show you the market. I want to take you through the market, do a quick scan. How much time have I got, whoever's listening? Yep, good. All right, that's plenty of time. So, right. Righto. See what we can do. Oh. That broke my heart. All right. Yeah, I'm trying to work for you here, right? I'm trying to help give you some value. Look, bottom line is this, okay? I'm looking at trend following. Now, you can see, these are live charts. This is not something I prepared earlier. I'm looking at the top 10 right now. That is it. There's nothing that I've created. There's no list. It is the top 10. Right now, we've got EOS against Bitcoin. It just happens that this is the first one that's there. Notice the moving averages. The 10 is above the 20. The moving averages are fanning. Do this with your fingers. Yeah, that's fanning. They're not touching. They're not twisting. They're not doing anything. They're apart. Higher low here, higher high, pulling back, bullish candle in that cradle zone. Now, here's the interesting thing. There's an opportunity there. The candle's a little bit big. Well, let's go back here. Look, pulls back in, moves away. Pulls back in, moves away. Pulls back in, moves away. This is factual information. This is not a hypothetical. This is not here's a pretty triangle that I prepared earlier. This is an equilibrium zone, and you can use this on any market, and you can use this on any time frame. That is the beauty of this bloody thing. It's fact. Now, I'm an objective guy. Look at this. Downtrend, pulls back into the cradle zone. Then what does it do? It moves. Doesn't always give you a trading opportunity, I will. I'm not saying that these are trades. I'm trying to teach you a zone. If you're a trader or you're looking at technical analysis, put this in, and I don't care what market you use it on. You will see what I'm talking about. In an uptrend, pulls back in, moves away, pulls back in, moves away. Let's go further out. Again, Bitcoin. Look what it does. Actually, let's go to the weekly, just to make it fun, right? Check this out. Moves away, pulls back in, moves away, pulls back in, moves away, pulls back in. It works, again, here. It works on any market and any time frame. I wanted to bring something that you could actually take away and use yourself. And it's not something that's wishy-washy. It is a matter of fact. Why are people not worried about price? Why am I overall bullish? Because look at this monthly. We're looking at Bitcoin here on the monthly. Notice that bullish candle? Look where it pulled back to. Right back into that cradle zone. It broke the high of that bullish candle. I'm still bullish Bitcoin because of this time frame and the overall tech. But technically, it works. Guys, this doesn't matter what time frame that you are trading. Yes, it pulled back in here and it broke down. There's a probability it will move lower. There was no trade there. There was there. Have a look at Ethereum. All right, same thing. Pulls back in, moves away. Pulls back in, moves away. Uptrend, pulls back in, moves away. Pulls back. Are you getting it? This is not something that I just put some slides up on a chart and said, here is the best examples I could possibly find. Believe me, trust me. Take what I say and be truthful. Believe me. Just trust me, please. This is factual stuff. It's real. It's live. This is in the market right now. You can go to any market. You can go to any time frame. And you look, pull back in, move away. Pull back in, move away. Now, the point of me showing you this and giving you a bit of an inside information as to who I am, what I do, who I speak to, the space. The beginning of the seminar was to explain to you guys that people that are in the know are not worried about price. So don't you worry. Don't panic, because panic brings on emotion, fear, greed, hurts your trading, hurts your decisions. The second part was to sort of say, look, here's some things you need to know. Technical analysis, trading strategy are different. Risk management, emotional control, and a structured trading approach are what you need for success. How do I know that? Because I didn't do the 3 things for long enough to realize that I needed to do those 3 things. I've lost a lot of money. I've blown out many accounts. But I did that about 8 years ago as the last one. Actually, more than that, but my point being, I've made the mistakes. I know what it takes. I've got the strategies. They do work. I don't want you to just trust me. I wanted to prove it to you. The cradle zone is something that you can use, whether you're investing, if you're looking at a token and it's extended, it's moved away from those moving averages and it's on a, parabolic move. Don't buy then. Wait for it to pull back. If this is the only thing you use, just wait. It's a tool that you can all take away right now. 10-period moving average, exponential or simple, doesn't matter. These are TradingView charts. You can get them for free. It's something that you can use right now. You can jump on the TraderCobb website. You've all got cards there. You can check out a lot of free content. I do more free content than paid content. You've got a heap of podcasts to get involved with. But guys, the most important thing is this. Just use that zone. Just start to, if you don't want to do it from me, learn that zone and build your own strategies around it, because you've got a 10 times more likely probability of success than if you just look at triangles. Have a good night. Go Queensland.